Sappi has weathered a tough year. The pulp and paper producer faced a subdued macroeconomic environment, ongoing low consumer confidence and persistent geopolitical uncertainty during the period. And this weighed with profit declining 87%. The firm says given the conditions, the group's performance exceeded its expectations. A dividend of 14 US cents has been declared. This is a reduction of 7%. Looking ahead, Sappi believes it will deliver adjusted EBITDA for the first quarter of its 2025 financial year. That is significantly higher than that of the previous comparative period. AngloGold Ashanti's delivered an improved third quarter performance and says it saw resilient performances from several key operations during the period. The bullion producers posted a 2% rise in output from managed operations and has reported a return to profit. CEO Alberto Calderon says a tight cost control and active working capital management allowed a higher gold price to flow through to its bottom line. AngloGold posted headline earnings of $236 million from a loss of $194 million. Truworths has rung up its sales for the first 18 weeks of its 2025 financial year. Group retail sales rose 2.8%. This was led by gains at Office UK. The firm says while trading conditions in Britain remain suppressed due to cautious consumers, Office UK has proved resilient, with sales rising 8% in rand terms. The business had less luck on home ground. Sales for Truworths Africa ticked up just 0.2%. That's as disposable incomes remain under pressure. Lesaka Technologies has met its revenue and profitability guidance for the first quarter, but the group has reported a net loss. That's after one-off transaction costs related to the acquisition of Adumo. If those are stripped out, operating income would have been $1.7 million. The company has reaffirmed its revenue guidance for the full year of between 5.2 and 5.6 billion rand. This implies around a 35% year-on-year growth. Grindrod has temporarily suspended its operation in Maputo and Matola. That's after the outbreak of post-election protests in Mozambique, which prompted the South African government to close the Lebombo border. The ports, terminals and logistics operator says it will continually assess the situation before resuming operations. Hammerson has completed the acquisition of the remaining 50% stake in Westkey for £135 million. The group says this gives it a 100% interest in a leading retail and leisure destination situated in the heart of England's south coast. The consideration will be funded by the proceeds received from Hammerson's recent disposal of its stake in Value Retail. Eskom secured funding for its Truworths pumped storage system. The power utility signed a 125 million rand grant agreement with the Agence Française de Développement. The project, located in Limpopo, will be pursued as a public-private partnership. Eskom says it will use the funds to procure a transaction advisor to conduct a feasibility study and to finalize a business case for the project in the first quarter of 2026. Further afield, Nissan is on a cost-saving drive, which includes cutting 9,000 jobs. This as the automotive giant battles falling sales in the US and China. Here's more detail in this package report.
Nissan is to slash its global production capacity by 20%. 9,000 jobs at Japan's third largest automaker will be cut. It says the restructuring will make its business leaner and more resilient as it battles headwinds in China and the United States. Nissan also cut its annual operating profit forecast by 70% to $975 million, marking its second downward revision this year. Operating profit for its second quarter tumbled 85%, far below expectations. Nissan joins a growing number of foreign automakers struggling in China. They're hurt by intensifying competition from nimble Chinese manufacturers in the booming electric vehicle market. But second quarter sales have also been sluggish in the US. They fell almost 3% to about 500,000 vehicles. Together, China and the US account for nearly half of Nissan's global sales by volume. Nissan says that core models in the US did not sell as well as expected and that the automaker had been surprised by the rapid growth in demand for hybrids. It confirms it did not have the hybrid and plug-in hybrid lineup required for the market. Automakers are bracing for President-elect Donald Trump to potentially impose new tariffs on vehicles from Mexico and other countries and to reverse many existing pro-electric vehicle policies.
In the meantime, Australian youths under the age of 16 will not have access to social media. Prime Minister Anthony Albane's plans to legislate a ban in a policy government it hails as world-leading. Let's take a look.
Our government's proposed age is 16.
Australian Prime Minister Anthony Albanese said that his government would ban social media for children under the age of 16. The country is testing an age check system to block kids from social media, with the ban possible by next year. Albanese highlighted the dangers to children, including harmful depictions of body image and misogynist content aimed at boys. The law will be introduced this year and take effect 12 months after approval. There will be no exceptions for children with parental consent or existing accounts. He added that social media platforms must prove they're blocking underage access.
The onus will be on social media platforms to demonstrate they are taking reasonable steps to prevent access. The onus won't be on parents or young people. There will be no penalties for users.
Communications Minister Michelle Rowland said the rules would apply to platforms like Meta, Instagram, TikTok, and X. YouTube would probably be included too. None of the companies could be reached for comment right away. Many countries plan to limit children's social media use, but Australia's policy is one of the strictest. France proposed banning social media for people under 15, but allowed exceptions with parental consent. The US has required parental consent for children under 13, causing most social media platforms to ban those under that age.